Welcome to part 5 of my 6-part series called How to Buy a House, because they don't teach you this in school. Today we are talking about everything that happens from contract to close, but if you haven't already, make sure you go back and watch the 4 episodes leading up to this, because that's what gets you ready to be in this position. The first thing that happens when you go under contract typically is turning in your earnest money. Here in my market, that happens within the first 3 days of your contract being executed, and earnest money is generally about 1% of the sale price. Most of the time it is refundable, but that is a negotiable term, as is the amount of earnest money. So there are cases where your earnest money is non-refundable, meaning no matter what happens, the sellers get to keep it. For the cases where it's refundable, which is the most common, that means that if you cancel due to an allowable term in the contract, so like if the inspections come back super crazy and you can't come to terms with the seller, if the house under appraises, which we'll get to in a second, or some other contingency that is built into the contract fails to come to fruition, in those cases, typically you can cancel and get your earnest money back. Here in my market, both parties have to sign and agree to how the money will be refunded. Assuming you get to close and everything goes fine, the earnest money becomes part of your cash to close. So I always say it's kind of like a down payment on your down payment. The appraisal is the bank sending a third party out to assure them that the home is worth what you have decided to pay for it. There's no action needed for you as a buyer, but it's important that you know this is happening and when it's going to come back, because it can impact your timeline to close and it can impact the final sale price of your house. If the appraisal comes back under value, then that opens negotiations with the seller, because you cannot get a loan above and beyond what the appraiser has determined the home is worth. If it comes in at or above value, then the seller only ever knows that it's good to go. And if it's over, they don't know that. And you just get to know and like celebrate quietly that you have instant equity. Underwriting is the biggest piece of this. That is where the lender is going to drive you crazy, asking for every single document that you've ever signed in your life, basically, or at least it feels like that. You can make this less painful by being really proactive and getting all of the docs you think the lender might need and then some together when you fill out your application. Inevitably, they'll call you and say something like, oh, the underwriter needs this, that, and the other, and you have to go track it down. And it's very annoying, but don't blame your lender. It's not their fault. And the faster you get them to them, the less painful it will be. Insurance is another piece of this, because that impacts your payment amount. And your monthly payment, you are paying for your homeowner's insurance. So how much that costs you impacts how much your payment is. So definitely shop more than one person, shop a couple. It's really important at least one of them is a brokerage where they can shop multiple companies for your insurance. Think about the age of your roof, because wind and hail deductibles now are generally different, aka higher than a typical homeowner's claim deductible. So like translation, lots and lots of roofs are not being covered anymore, or if they are, the deductible amount is so high that it's almost not even worth going through insurance for. So that is something to keep a really close eye on if you know you have an older roof that will need to be replaced in the near future. Another biggie here in my market is sewer line. Sewer line insurance, or service line insurance, and water intrusion coverage both are typically add-on policies that you have to opt into. So ask your insurance person if that is on your policy and how much coverage there is, what the waiting period is, what the deductible is. That'll all be different because it's an add-on policy. It's not part of your base policy most of the time. In my market, if you have a home with a clay sewer line, you need a lot of coverage. Those are very expensive to repair and replace.